Good morning, everybody. Welcome to the game plan. Of course, I'm Gareth Soloway here to analyze the charts, the data, and basically what the markets are most likely to do based on probability. My name again, Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So listen, tariffs is everything at this point. Let's be fair. Markets are hanging on every word. This morning, we were trading higher on the S&P futures. In fact, I'll show this chart to you guys right here. This is the pre-market data this morning. So you can see markets were grinding up in the 6 a.m., the 4 a.m., the 5 a.m., and the 6 a.m. up to about 6 o'clock in the morning, my time here on the East Coast of the U.S. And then all of a sudden, we got some chatter about basically tariffs at 20%. And what happens? The markets took a nosedive right back down, chopped around, went lower, and are now climbing back up just a little bit. All right. So again, we are climbing back up. But essentially, my point being is that this market is hanging on every word on tariffs as Liberation Day is tomorrow, right? Tomorrow being the day where all of these announcements are going to be made. How much, on what, on who, all of that is going to be revealed. So you have two options for today. If there's no chatter from the White House, the markets honestly could be a little bit on the quieter side. But as we know, chatter is very common. We even got some pre-market this morning, and therefore you could see some volatility if we get kind of word out about how much. Is it going to be less than expected? Is it going to be more than expected? Now, a couple thesis here points. Number one is if the tariffs come out, even if they're X amount percent, the markets may breathe a sigh of relief that we have some certainty, unless the president brings in more uncertainty, which I hate to say it, but he probably will. He's going to most likely say, okay, we're going to do tariffs of, let's say, 15%. And I'm just choosing an arbitrary number. But then he's going to say, but if these countries don't do X, Y, and Z, we're going to raise it to 30%. Or if they do X, Y, Z, we're going to lower it to 10% or 5%. And that's the problem, is that tariffs, when they're implemented, they're used essentially as a threat, and they can be taken off or increased. And that uncertainty is going to make the markets not very happy. All right. So listen, ultimately, we got some good signals yesterday. Yesterday, if we look at the intraday chart on the S&P, we opened with a sharp sell, and then we rallied essentially the rest of the day. This was yesterday after hours. This was pre-market. Here's that tariff, blurb that came out that caused the markets to come in, but we are rallying back. Now, turning our attention to the S&P on the daily chart. This was amazing, folks. You remember yesterday in the game plan, we talked about how this was going to be a pivotal level. In fact, I showed it to you guys on the intraday chart. We were actually at that time right above it or just below it. And I said, watch this level here. Do we close below it or do we close above it on the S&P? Well, you could see at the open, we flushed down. We came in a little bit before rallying back up and closing above. Now, again, for me, this is the pivotal level. So a daily close below this level would be very problematic for the markets. But as long as we stay above on a closing basis, the markets have at least some upside potential back to this level right here. Now, if we flip over to the QQQ, you can see the Qs are actually basically flat to slightly lower here on an intraday basis. But the same sell-off occurred in the early morning when we got that tariff 20% news that came out, or whatever it may be. It was more from inside the administration, not from the president directly. But the markets have crept back up. But if we look at the daily chart, the same thing applied. Look at how the QQQ opened below the line, flush down here, and then recovered to hold above that line. That saved the market for today. And again, as long as we don't have a daily close below that level, I would give a neutral to slight bullish bias to the markets, all right? Just in the very short term. Now, someone was saying to me, oh, Gareth is so bearish, but he was telling us to buy stocks yesterday. on the big gap down. And they were saying, well, how does that make sense? Why is he bearish? But then saying, oh, well, but go long, Broadcom at the gap down or Google at the 151 level. And the answer is very simple, is that shorter term, you have one bias for short-term trades. And then on the bigger picture, you can have a bigger bias that can be opposite. And this is where a trader comes in, right? A swing trader, a day trader, number one, is just intraday. So, I mean, that's even more short term. But a swing trader, you can play these levels. And in fact, if we go back to the charts, I want to just show you guys real quick here. If we go back to the charts and we look at Google, all right, what was the level on Google we talked about yesterday? Below 151, right? It got down to about 150 and change. And then look at the bounce that you got. All right, now listen, do I think Google in 6 months from now is going to be lower than it is right now? Absolutely. But that doesn't mean we shouldn't make money on a bounce here on Google back to, let's say, this area or maybe up here. I'm just looking at this chart, and one of the interesting trend lines I see, look at this trend line right here. Look at that trend line. That's a great upside target for Google right now. Pivot high, and pivot high right there. And then, so again, the idea being is if we rally all the way back into that level, I'm going to have to assume there's going to be resistance at around 165. But that's about a 10% move. Now, for me to make 10%, let's say in 2 weeks, that sounds great to me. I mean, again, a lot of investors, long-term investors in the stock market, we're not talking crypto, we're not talking other things. In the stock market, the general consensus is you want to make 10% a year. Now, the markets, since the Federal Reserve has been stimulating like crazy, has done better than that in general. But in the long term, if you look at the last 50 or 60 years, 10% is kind of your baseline. To be able to make 10% or 15% in a matter of a couple weeks to a couple months is incredible. And that's, again, the point of swing trading, to look at these charts here. But going back to the thought process here, I want to show you guys this. So listen, we have a level that as long as we hold on the S&P, we're back on the S&P chart here, this would be neutral to bullish bias, maybe for upside here. But take a look at this. If we go to the S&P 500 and we go to our monthly chart, and we flip to our logarithmic, and I've showed you guys this before, but it's a very powerful chart. All right, this is 1929. All right, this is 1929 before the stock market crash in the Great Depression. This is the dot-com bubble high. And then look at what we just tagged. So when you look at this chart, do you think that in the next, based on this chart, right? I mean, listen, not using emotion. I mean, there's a lot of us who have 401ks that would be like, oh, I really hope the market goes up. But ignore that. And just say, based on this historic trend line going back to 1929, almost 100 years ago, would we assume that the mid to long-term market is going down or up? And for me, I would just say down, right? I mean, how do you not at least acknowledge that, right? That it would probably be headed lower, in the very least to this pivot high right here, which is your 2021 high. All right, then if we just go to that other chart that I've showed you guys before as well, which is very, very powerful, the NASDAQ composite, and we look at this, okay, this is a very powerful one as well. All right, this is what I used to call the high in December. If you remember, Drew, one of my top traders and a specialist on cycles, and he's going to do trading the close today. He has some more cycle information for you guys. But basically, this was his cycle date. It literally was the 16th of December. And look at the high. It touched this trend line. And look at what's happened. I mean, that's incredible. All right, he's a master of cycles. He really is, guys. And I encourage you to kind of tune in because he is amazing in his analysis. But when we look at this, you have your COVID low, your bull market high, your bear market low, and now would we assume the markets could potentially come back here? I think so. I mean, that makes sense, right? Low of the channel to the high of the channel, to the low of the channel to the high. In theory, we should come back down here. Now, it's not going to be a straight shot, right? This is why you can be bullish, right? So even when the markets are still, let's say, I still anticipate we still have another 10, 15% downside at minimum on the S&P, maybe as much as 15 to 20 on the NASDAQ. But just because I have that mid to long-term view, it doesn't mean I'm not going to go long in the short term to make the alpha on the bounces. Bounces in bear markets, and I said this to my traders on the trading floor that we have yesterday, bounces in the bear markets are incredibly volatile and massive. Like some of the biggest bounces you will ever see are in a bear market because what you're getting is short covering. So a lot of shorts pile in, and then when the bounce comes, it starts to squeeze the shorts. And that's why it's basically a stock market short squeeze that occurs. And so you want to have the levels that even if your mid to long term is still bearish, you want to be able to maximize your gains on the bullish side in the short term. And then you just flip it around and you say, okay, well, I either go back to cash or I short the market when it bounces up. All right, so let's get back into the charts. But again, some very cool charts. I mean, this is one of my favorite charts to show because it's so powerful. I mean, you're literally looking at the major points on the market here over the last basically 5 years at this point. All right, let's talk about the SMH. So the SMH, guys, take a look at this. And again, I'm going to take away this line right now because I don't want to focus on it. But the SMH and the semis are relatively strong today. And they're strong, which tells me that they may have put in a short-term bottom yesterday. Okay, now again, short-term being the key word here, right? So number one, we saw SMH, which is the Avanex Semiconductor ETF, opening and flushing lower and then reversing and closing flat. Now, I think today, this morning, if we look pre-market, it's basically flattish to slightly lower. But look at this, guys. So number one, look at the parallel line and the parallel line. And I draw this to your attention because you had this classic M top. Here was your A down. But then look at how you consolidated between these points and this point, high, 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 and high before breaking the parallel. Remember, upsloping, remember yesterday, upsloping channels have about a 70-80% chance of breaking to the downside. They highly favor the downside. So here you have your breakdown, and then look at what happens. It literally goes back, kisses the underbelly. What do we call this? A retrace to the scene of the crime, which is now resistance, right? It was support, 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 and now it breaks. This becomes resistance, and it rejects price and comes down. Now, you might say, okay, well, doesn't this mean it's going to fall further? The answer is mid to long term, yes, it most likely will. But I want to show you this. If you take this low connected to this low, look at what you get. The exact low from yesterday. If you take this low and this low, right? So this low and this low, look at what you get right there. And so what we have here is a conclusion, right? And so again, we want to be scientists of the charts. We want to use logic and data to make assumptions based on probability. That's what being a scientist is all about. So the idea here is that we can look at this SMH chart and say, okay, based on that, in the short term, you likely have a little bit more upside. How high is going to be a good question. Maybe back to this gap fill right here. But eventually, the bigger channel is breaking, and we likely are headed lower. My longer-term target is this. See this flat line? We've never done a real retrace to this scene of the crime. I think eventually long-term we go here. But that's not going to stop me from going long AVGO. AVGO, bottoming tail yesterday after a drop from 197. This was a chart that I gave you guys yesterday to be heads up on. Even NVIDIA might be in a bounce play here after the great reversal there. I saw SMCI was trading higher today. By the way, I got to show you this, guys. Look at this SMCI chart. Low pivot to low pivot, and look at what we hit yesterday. And then if you look at SMCI, what's it doing today? It's net positive. This is where it closed yesterday. So it's only up about 50 cents, but still it's net positive on the day after reversing. But again, the trend line is the key. That's just, and again, all the beauty of this is, and I know all of us have experienced this in our childhood probably, is, you got those books, Connect the Dots, or, all those kid stuff. And that's really what we're doing here in the charts. It's keeping it insanely simple, but it works. It works. And that is the beauty of it. All right. So let's get back to the charts here and take a look at a couple other things out there. Google was one of my favorites yesterday. I did pick this up with Smart Money Stocks and ETFs. If you're a member of that service, you got the alert when we literally were right at this line below 150. So we're already in the money on that. And again, I want to be clear. I am not a mid to long-term bull on Google. But do I think it could bounce back to this area right here? Yeah, I do. So I'll take the 10% or 8% or whatever it turns out to be, and I'll say thank you very much, and then I'll let it dump out, go even lower. Let's say it fills the gap down here, and then I probably play it again. And so as it comes down, if you have technicals, you can play these on the long side. Even in a bear market, you just have to know what you're doing, basically. Another incredible chart, guys. I wanted to show this one. This is an incredible chart on United Airlines. This stock was just a runner to the upside. And then look at the reversal candle, the gap up on earnings and the reversal, and that was it. And then look at the bear flag it formed, right? So again, you can see sideways chop, and then the breakdown, and then the collapse, broke down, retraced, rejected. But this actually, again, I still think mid to longer term, it's still going down here, much like Google, right? Or Alphabet. I still think eventually it gets down here, but it could be due for a decent bounce here in the near term on UAL. But just an incredible rollover. I mean, it was, by the way, this was one that surprised me when it ran from the August low of 37 here. This was a 212% run higher in basically, what was that, 4 months? I mean, for an airline to do that is almost unheard of, especially for a mature airline. But then at the same time, you can see what happens. I mean, when party is over from to yesterday's low was a 45% drop in the stock. Incredible. And again, I always want to impress this upon you guys is that in bull markets, and it still catches me off guard. In bull markets, things will go a lot higher than you ever think they can, that ever makes sense because irrationality, right? So a technical trader trades on data and charts and logic and probabilities. But markets are not always rational. And so you have to always leave room for that, which is one of the reasons why when I go short a stock or I go long a stock, I'm never going all in on a position because I've learned, unfortunately, the hard way that in general, markets can go in each direction a lot further than logic dictates, which means eventually you'll get the pullback. But can you weather the storm? Can you be calm? Can you slowly dollar cost average? In other words, do you do a 1/5 position and then buy your second fifth and your third fifth and your fourth fifth and your eventually your fifth fifth, making it a full position, but the whole way dollar cost averaging down? So you're kind of calmly accumulating as the irrationality occurs before the bigger bounce, and vice versa on the short side. That is the key. And I can't tell you enough how as soon as I go heavier on a position, it's almost like a guaranteed it's going to screw me and I'm going to have a loss. It's like, and I don't do it very often anymore, but it's just the way the market works. The markets are almost like a human entity or a living being. They just know the strings and the little nitpicking and the things to do to us to trigger us to panic and to do the wrong thing at the wrong time, which means as traders, we have to logically think, how do we negate that? How do we overcome that? Dollar cost averaging with smaller position sizes is the way. Now, listen, some people will say to you, yeah, but then if you buy at that level and you only buy a 1/5 and then it goes in your direction right away, well, then you didn't make as much money as you could. I'm fine with that. And I'll tell you why. Because it means, number one, I was right on my level. Number two, it was an easy, stress-free trade. And number three, I know that overall, it's not about how much money you make in investing. It's about how much you don't lose. It's a weird concept to think about, but you got to focus weirdly more on the losses than on the wins. All right, let's get back to some charts, getting on some tangents here. I apologize for that. But again, these are all good things to kind of keep in mind. PVH this morning reported earnings. That stock is higher. So again, we got some decent earnings here. I don't think it's going to impact the markets because tariffs are just too powerful. In terms of a day trade on this, it's up about $10, which is a good move. But again, if we look at the chart, it was beaten down. I mean, royally beaten down here. There might be a level aggressive 76.70. I'm not going to take that level. But then if we got up to about 84, I might start to nibble gap. This is called gap window. And then gap fill, if it ever got up to 89, that would be a huge day tradable short. I don't think it gets there, but I want to show you, even as a swing trade, that might be a great level. And I'll show you why. You have this line all the way through. So gap fill here, but also pivot low, kissed it here and hit it here. That's a huge level. So that actually right around just below 90 might be a great swing trade if it gets there at some point. Let's take a look at Bitcoin real quick here. Bitcoin inching up just a little bit. We still have the downsloping trend line here. Again, this is going to be short-term resistance at around 86,000. If it breaks through that, we know our level is 92,000. Downside support, which I'm still favoring at some point in the next couple weeks. I still think we tag 74, maybe down to 70,000. I probably start to nibble on a long if it gets down there. Now, some of you guys, by the way, may say, yeah, but if it doesn't get down there, you missed the trade. I'm going to tell you right now, that's fine with me. There are so many trades when you start analyzing stocks and crypto and all these other things. I missed literally 95% of all trades. It's okay because I still make a ton of money on the 5% that I catch. And so the discipline of only taking the setups that hit your level is the difference between a losing trader and a winning trader. Just is. Just is. And so I might miss a trade. I'm okay with that. I'm at peace with that because it's not the only thing I trade. I trade lots of things. I look for charts on anything. Once you learn to read charts, you can trade anything, folks. Literally anything. Commodities, Forex, stocks, crypto, all that stuff. All right. Let's go on to gold. Gold continues to power up. Today's price action makes me wonder if we are having a blow off top on gold. Not that it's a long-term top. I'm still bullish on gold. I still have my long-term gold holdings. But again, this is a very powerful move. I'm watching to see, is this going to form a topping tail today? Let's watch really closely on this chart. But again, gold is up a little bit on the day. Silver, let's take a look at silver here. Silver is down fractionally, just continuing to be left behind by gold. Palladium. Now, I talked about palladium, one of my biggest positions last week to you guys. I love this inverse head and shoulders. We could see, again, the downsloping wedge pattern from 2022 that's broken out. As of now, since last week, it's actually done very well. I think it was Tuesday or Wednesday, so it's right around here. It's gone up nicely. I still think there should be more upside in this, although, again, it might have a pause or a pullback along the way. Next up, let's take a look at oil. Oil continuing to push up. I did pull the trigger on a small short on oil yesterday, right at the highs. Notice it did pierce my level. I think there were some shorts here that probably got squeezed. But again, I'm slowly starting the accumulation mode. My next add level on oil would be at 73 to add to that short position. So what we just talked about in inching into positions, because you just don't know and the market can be irrational, this is a good example of that. I started yesterday right here at the highs, a little short position by buying some SCO. And then again, if it goes up here, I'll add to that. And if it goes up here, I can add to it again. That's always preparing in case it goes against you, which is the key to another key to profitable investing and trading. Natural gas is coming down. I was kind of hoping it would get back up here to short. Maybe it still will, but right now, natural gas is pulling back beautifully on the day. All right, guys. So listen, the big key to today, number one, semis right now are strong. So I'm keeping an eye on the semis. Semis are on my radar for trading today. I liked the reversal on the SMH we went over, but the markets are going to be zoned in to the tariff commentary. So what comes out of the White House? What do we hear? Is there anything definitive that comes out? So be ready intraday for some crazy moves. It could be a big flush. It could be a big pop. We don't know. Maybe the White House stays mum on everything until tomorrow. We'll have to find out. But again, if anything leaks out, the markets will react. So be ready for volatility. Again, if anything leaks out, otherwise, we're all waiting for this Liberation Day tomorrow to figure out what the exact tariffs are. I will be back tomorrow morning. Drew today talking some cycle action with you guys in his charts, which will be amazing. I hope you tune into Trading the Close. I'll see you soon. Take care and thank you.